Hi everyone, and welcome to a special edition of Mish's Market Minute. My name is Michelle Schneider, and today is Thursday, July 12th, 2012. I am the Director of Trading Education and Research for MarketGauge.com. So let's go through the S&P and the rest of the indexes and then look at a couple of ETFs. The spiders were incredible today in that they gave us such a clear point to be looking at for that to cross over in order for us to get excited that after a 5-day drop we could actually see a reversal and a nice end of the week. But instead what it did was it got right up to 134.12, which was a 1-day pivot, and then in the last several minutes of the day dropped down to close beneath the 50. So we are still relatively indecisive here. We're in an unconfirmed now warning phase, unconfirmed because we're only 1 day closing under the 50. We need 2 days to confirm that. Number one, this dotted line is the exponential moving average, so we're holding that. So that means to me in this scenario one of two things. Number one is if we hold this exponential moving average and we can clear through the 50 again tomorrow, then we would be looking to be possible buyer and we would have a clear demarcation of risk to underneath today's low. If for some reason we actually sell off further, let's take a look here at this RSI. You can see the RSI is 3.72. Now that's only a 2-day RSI, but it is at an oversold condition. Anything under 5 is considered to be oversold. So if it actually did indeed break this, rather than be a seller for more than a day trading opportunity, I would probably at least have the knowledge to know that we shouldn't be a buyer. Then, of course, we'd be looking at that point at the 200-day moving average, perhaps these lows right here. Now, the third scenario, also possible since it is Friday and it's summertime, is that we don't really do much of anything. We actually hold today's low, maybe we test yesterday's high, maybe we close right around the 50-day moving average, in which case the message to me would be take a cash position over the weekend and we'll have a fresh look on Monday. Now I just want to show you, because it's so incredibly interesting to me, how these technical signals work along with their pivots. These yellow lines are my 1-day pivot. 1-day pivot high, 1-day pivot low. This gray one is my midpoint or my floor trader pivot. Here's S1, previous day low, S2, and the opening range on the first 30 minutes. So we had an opening range reversal. Certainly that wasn't necessarily a good indication to go long because it was underneath a lot of resistance. However, when it broke out, it did show you or suggest to you at least that it was going to be attracted to the pivots, which is exactly what happened. But in order for this to be a real reversal, which is why I posted 134.12, it needed to cross this 1-day pivot. And even though we still had some upside resistance, that was a beautiful point because, as I just showed you on the daily, it also crossed the 50-day moving average and would have been a very nice strong close in the green after all these days down. But now instead we have a situation where we still have an inclining 10-day moving average, a declining 50-day moving average, and like I said before, an unconfirmed warning phase. Now Nasdaq is very oversold, an RSI of 1.95, holding the exponential moving average underneath the 50, confirmed warning phase with a big distribution volume day. But right now you can see in the aftermarket it's actually ticked back into the green. That's relatively meaningless for me right now. It's really what happens tomorrow. But nonetheless, I would say the exact same thing, as I wouldn't certainly be looking to be a seller at this point. And where would I possibly be looking to be a buyer would be over today's highs, which you can see in projected pivots for tomorrow matches up with R1. Now taking a look here at the Russell 2000, even though it's showing a tick lower here in the aftermarket, it actually closed at 78.79, just a little bit higher than that. So we have a couple of interesting things at play. Number one is we have another spike in volume, not huge, but certainly more significant than what it's been over the last week and a half, with a down day. So that's a distribution day in volume. We held a declining 50-day moving average with a long wick on the candle. So this would be another interesting one to go to after many days down, oversold condition. This one at least is still in a bullish pattern, so still remains first choice with a close runner-up in the SPY as second choice of where I would go tomorrow over today's high for a possible long entry, and I think we would have another clearly defined risk to underneath today's low and that 50-day moving average. Of course, this too would still have hurdles like the 10-day moving average, but we'll worry about that when we get there. Now let's take a look at a couple of the ETFs. Let's start with my favorite lately, actually all year, which has been real estate. And you can see real estate looks like it's trading in another universe, not certainly on the planet that the rest of the indexes have been on, or a lot of the other ETFs. And so we had a nice almost inside day yesterday, but a green pattern, and then a range expansion today after yesterday, plus a close over the 10-day moving average. So this is not only in a bullish continuation pattern, but it's also showing you that it's a condition 1. Now, of course, this bar right here, let me highlight this for you. This is an interesting type of candle situation. We call it a possible slingshot pattern, is when it makes a new high and closes near the low. So what that tells me right now is, as good looking as this thing is, until it actually clears above these highs right here, which is 65.12, we had a couple of tops up there on this day and then on this day, we still have to be somewhat respectful of the fact that this could have been a top in place and we're still having some last buyers in here. So at this point, if you're not already long from lower levels or you're looking to get long, I would say I would wait for that 65.12. And we're certainly not overbought, so you should have plenty of room on the upside. And in fact, if we take a look at the weekly on this, we also have a Bollinger Band in place here. So that 65.12 would serve a couple of purposes. It would negate any kind of a slingshot pattern, number one. And number two, it would get us over the Bollinger Band and the highs over the last couple of years. Looking at the financial sector, another area I have been incredibly interested in, and actually believe that with all the negativity it's held up pretty well, is XLF, the financial ETF. We have a trend line coming down from the highs that you can see right here. We're nowhere near it. So looking at this right now, here we go. We have another unconfirmed, back to an unconfirmed warning phase in this one. Here's your strongly upward 200-day moving average. We had been long this. We exited actually 2 days ago. And I'm waiting for a possible re-entry. So what would I be waiting for? Number one is, you can see we're not oversold. So to me, whereas I wouldn't necessarily be looking to short any of the indexes, if there are any particular names in this sector that look like they could have some lower prices in store, with this not being oversold, you can certainly look to that for shorts. But on the other hand, if you're looking at this in particular, considering we're coming into a lot of support and considering how strong a pattern bottoming we had here back in June, I'd rather at this point sit it out and wait to see what would happen to the buy side. 1425 was today's low. 1428 has been pivotal. We clearly have to get through the 50. We have to get through the exponential. And I believe at this point I would rather see it get through here, this 1450 or this 10-day moving average, and then I would actually believe that not only will we continue to go higher, but that at some point we'll break through this trend line and on our way to much higher prices. Now, semiconductors is really pathetic. I've been talking about this one in my daily. I was talking about the fact that we had one shot, which was negated yesterday, to keep on to this 30-50. I also had mentioned it was breaking down under the 200 and had a death cross. So you certainly had a short opportunity here. But now at this point, look at your RSI. Very, very weak. Volume patterns. This wouldn't exactly be a blow-off dump type of volume pattern, but what we are looking for right now is this low right here, which is 29.57, with today's low at 29.79. So if we hold on to the low, maybe we can have a gap. Who knows? This market's always full of surprises. Then perhaps we can see at least some kind of a rally up to the moving average resistance here. Otherwise, at this point, it's going to have a lot to prove itself to the upside before it would feel like it's time to get back in, number one. And number two is, I would not be looking at short right here with this being so incredibly oversold. XRT, look at the XRT here. You had another distribution in volume, broke down under the 50, held the 160. This was after, a nice big move up here when all the other markets were going down. And now what looked like a possible area that was going to stay strong has weakened and yet has very little room to me on the downside in terms of a new short. but certainly would need to prove itself as well in order to go long, which means it would have to hold around here at 57.30 and get back over this 50-day moving average. I also want to show you transportation. We have no position in any of these ETFs right now, but what's interesting to me is we had gotten long when it crossed back over the 200, caught this pop, got out now on the same day that we got out of all the others here on Tuesday, and now you can see that we're back at this 200-day moving average with a low RSI. So keep your eye on this one to see what happens here. If it breaks down under the 200, again, probably not the best short in the world, but if it can get back through, we might have a low risk entry. Too soon to tell. And one of the things that I've been writing about over and over and over again are commodities. So gold, you can see with gold, also big distribution day in volume. It had a nice rally off of the lows. Look at this chart. This has just been one real sloppy chart. But you have to say, just from strictly looking at phases, once this went into a death cross back in April, I've been talking about the negativity of this and using any rally to go short. And certainly if you had done that, you would have had some nice money from the short side. And it does seem to peak at the bottom with these nice long wick kind of candles. Today was a little bit more orderly, and it's not oversold. So it's very possible that not only will we go back to test this 148.50, but that we might even break it and continue to go south. USO is hanging in there. Had no interesting volume pattern whatsoever, hanging on to a fast-moving average here. And so it'll be interesting to see what happens with this. If we get back through the 50, we'll go back into a recovery phase. That would be a good sign. Otherwise, right here, I don't know if I'd necessarily be a seller unless we break down under these levels. And that goes pretty much even for the oil service holders. Looks very similar, except that today it actually broke down under the 10-day moving average. And so this is looking a little bit more vulnerable, although it did come back off of its lows, also with a distribution day in volume. So all of the energy, oil, and metals still look vulnerable to me overall. And last, I'd like to talk to you about IBB, because Biotech was a great runner throughout the entire year. It's shown you signs of exhaustion a couple of times. Here was one when we had a slingshot pattern. Here was another when we had three highs. Then it starts to come back. It gets back through its 50-day moving average. It has a nice run. And this one, after an inside day, was the best pattern we could see, that it broke down, and now you can see it's under the 10. But just like real estate, this is still bullish because it's still above this 50-day moving average. So even though we broke down under 130, we came right back through. You can see we closed in the green today. This continues to be a good trader overall. Dips are buying opportunities. And so now, unless we actually convincingly break down under this 50-day moving average, if you're looking to be long the market, you want to go to possibly retail, definitely real estate, definitely biotech. Wild card may be financials at this point unless it clears the 1450. And if there's any rallies and things to go short, it continues to be the metals and the oil. So that's it for now. You all have a great evening. Happy trading, and bye for now. Thanks so much for watching.